Welcome back to the show. Let's talk to somebody I haven't actually spoken to before. His name is Dhall. He's a technical analyst at RANsquawk. Our charts for sailors, we're about to find out. Raj, welcome to the show.
Thanks, Moose.
Right, we've got 4 slides. Let's kick off with the first one without further ado. Dollar yen, we had this massive bullish formation.
We have.
What's going on now?
Okay, so obviously we've had a couple of comments from Yellen recently, and we're seeing a slight rebound of the dollar now. So I've put up the Fibonacci here, and you can see that it did break through the 23.6 level.
Yep.
But now it looks like it's kind of coming back towards it, up back through there, and I fully expect a test of the mean value, or maybe even to the top of the range there.
Okay, so you're looking for this basically to go back up to where?
Yeah, I mean, up to the highs there, because we had the double top, and obviously the second rejection candle there was it was a very good wick pulling it to the downside. But another big thing that I've been looking at on this chart for a little while is the kind of bullish hidden divergence on the downside, the failure swing there.
Yeah.
So I've been expecting this to come, but I haven't had the break of that trend line yet on the RSI in regards to moving back up. I think it's going to move back up now, and like I said, I think we'll test around the mean values, if not even the highs there. I think the risk to reward is to the upside on this.
Okay, so a buyer for choice. Let's move on to the next slide. Lloyds Bank PLC. Should I be buying into the UK economy?
I believe for me that this is still a long trade here. I think the financials have been performing very well. And you can see here, so when we made the period of like lower lows, lower high, lower low, lower highs, and we've had the change there, which was roughly at the break of the 60, where I've put the little price label there. That was when I was looking at a continuation of this formation. So now, as it broke through that 60.95 level and it's moving up, I've got a couple of targets in there, but it's broken out of the mean value area range, which was a lot lower, and I expect it to find new mean value range up between the 70 and 74 area, something like that. So we get more on the volume profile higher up in the prices. Okay,
so we're a buyer for choice there. Let's move on to the next slide. Gold, Ichimoku cloud resistance.
Yeah, so this is going to be contrary to my thoughts on dollar yen, I'm afraid. So as we go into Trump's inauguration, and we're going to hear a little bit more from him, you would generally expect risk to the risk play to be to the upside for gold. But I'm seeing this rejection here and the size of the cloud, and I'm not saying that this is going to reverse and go back down. What I'm saying is that it's going to be an area of a retracement, and we had where the other arrow is at the bottom, which is the Kijun-sen, Tenkan-sen crossover over there. That kind of, I'm looking for support closer down, maybe 50% of that move, and then maybe going back to the long side on here. So I don't think it's over.
But short-term cloud resistance, small seller for choice.
Yeah, exactly that.
Okay, so let's move on to the last slide. Copper, point and figure chart. What's box size and reverse have you got on this?
Yeah, so I've put it to the second decimal, and on the reversal side I've put 5. So I've been like slightly conservative in terms of how many crosses it needs to change to reverse here. But the key for me is the previous wave high. We had a print above it on this new wave. So I still believe I'm bullish on this. Again, pretty similar to what I was talking about with Lloyds TSB. So we had a consecutive lower low, lower high, lower low, lower high. And then we had a break of the change of trend, and this is like now the areas in which we're seeing higher lows and higher highs because it printed just above that previous wave high. So I'm bullish to this, and I've got my upside target there where that arrow is on that price level, and that provides a significant area of resistance up there too. But I just think the way that the infrastructure spending and whatever we're seeing from here, and also the bullishness recently we've seen in Aussie dollar also supporting this trade, and I believe we're going to test.
So as I always ask guests, where's the stop loss if the charts are wrong?
Yeah, no, perfect question. I mean, I think using the charts and the technical analysis is the best way to decide the stop losses. So if we've got the consolidation triangle formation at the bottom there, which I haven't marked, but you can kind of see where the triangle formation breakout was. I would have stops just below mean value around there, and have the target to the upside. So the risk reward is skewed to the upside, and I think it's like 1.8 to 1. So it's not quite 2 to 1 risk to reward, but in terms of my philosophy, when it does get pass to 1 in terms of your profit, maybe cut the risk in half then and trail your stop onto the upside. But initially, I would have my stop in at where mean value is on that consolidation at the low.
Raj, we've run out of time. Thank you very much indeed.
Thanks.
Hopefully your homework is better than anybody else's.
We'll
Thank
see.
you very much indeed.
Thank you, Miss.